Sunil Sanger, representing Canon Assurance. Couple of questions. One on the property revaluation. What is the reason for the rethinking? I think you just probably in 2009 was when you decided to revalue the property, and then in 2011 you have gone back to historical costs. So what is the reason for the rethinking? Secondly, on the, if you could, we have seen the product-wise contribution. Could we get some idea of how much Kenya is now contributing in terms of turnover as well as profitability, the Kenyan business and the non-Kenyan business? And lastly, are you in a position to comment about the Kenya pipeline case or the arbitration? If you could comment on it, if you're in a position to do so. Thank you.
Okay. Again, another good three questions. First, on the decision to change from revaluing assets to historical, I'll tell you why. I'm sure you have seen what has been happening in Africa, and especially in the countries we operate across, let's say, East Coast Africa, in terms of value of properties. One of the reasons that we considered and brought up the decision not to revalue anymore and go back to historical value, we were quite worried of a big jump in value of our fixed assets. Over the last 3 years, I'm sure you have seen some people are saying it's a bubble. I don't want to say my views, but I can tell you that when we were talking to even banks and other financiers, they recommended to go to historical value in order to avoid overvaluing your fixed assets in your balance sheet, okay? And I can tell you that, for instance, we were had we really revalued, we would, we were expecting a big jump in the following countries, a big one, let alone Kenya. We all know property prices, what they have done in the last 3-4 years or so. But especially, and correct me if I'm wrong, Ethiopia, Rwanda, Kenya, Tanzania. So, we didn't want to bring on board such values that may become, bubble assets in a way, okay? So we said, you know what, the best way, and we got some advices on that, is to go to historical value. And then something else to add.
Sorry, I just wanted to add, we've always revalued assets for many, many, many years. And when we saw this trend developing with the property prices escalating beyond what we imagined, and we even saw it in Kenya when we sold properties, in the next few months it just rocketed. We actually did an investigation properly and benchmarked and saw what was best practices that other companies were following in the same industry, in the similar size of ours, and also in the industry. And there are very, very few companies that actually do revaluation of assets. So we actually kind of followed best practices.
Okay. And I'm sure you are aware of the assets we sold some 2 years ago on Konyange Street, okay? And if you go to the financials of that year, you can see how much capital gain we gain. We know that after 2 years, the buyer is offered twice as much as he paid us, and he's still not selling. Meaning, just to show you, almost 100% increase in value of that assets that we sold here on Konyange Street. So, I think we took more conservative approach, and I think it's the right one. The Kenya contribution is, of course, is strong. The question is from which sector it comes. And that's why we started reporting, especially to investors and shareholders, more on the business lines. Because I can tell you, it's not that Kenya retail is a strong business line, for instance, because of certain issues to do with the price control, and competition, and so on, and the heavy investment that it requires, and so on. But there are other business lines that we do generate let's say strong results and strong numbers, and overall Kenya is contributing, of course, substantially, but with with its growth within the group coming down vis-a-vis the subsidiaries or vis-a-vis the other group outside Kenya, because that one is growing fast, and that one is struggling with the regulated environment and difficult one, focusing on certain business lines, like I was explaining a few minutes ago, on which niche market, niche business lines that we can generate margin. So that's the way we look at Kenya. But Kenya for us has been very strong in terms of volume. You noticed, if I'm not mistaken, this year is over 1,050,000 cubic meters. Of course it does. You have to understand how this whole business works. It's all about economic of scale, and if you have such a big volume, it supports, of course, the other business lines. It supports export, it supports trading activities, and so on, because then you can bring sizable ships into the port of Mombasa and market the product within Kenya and beyond Kenya. So it brings down the cost per unit for the overall group. Okay, and KPC, okay, it has been in the media, so I won't go much into it, but you know very well there was KPC did file an appeal with the High Court. The High Court came up with its ruling, and we decided to appeal against this ruling with the Court of Appeal. And reasons for that, and I prefer to read it from, because I knew it will come up. So I just want to read, and because it's part of my press release, approved by my legal advisor. So we filed an appeal on that judgment on grounds that the High Court exercised jurisdiction which it does not have under the law, that the court had no jurisdiction under the law to grant reliefs which were not pleaded or prayed for, and that the court engaged in re-evaluating or re-evaluation of the or reassessment of evidence, which evidence by consent of the parties had not been had been excluded from record before the High Court. Basically, what we are saying is that the ruling seems to us very strange. We don't understand it. On what grounds, on what basis, and whatever. You are Kenyan, I'm sure you understand better. So, but we are challenging it in the Court of Appeal. Thank you.
Eric Musau from Standard Investment Bank. A couple of questions. With regards to the aviation business line, I think there's been suggestions by some airlines sort of coming together, African Airlines, with regards to sort of procuring fuel in terms of from one location, or making sort of one sort of bid in order to try and minimize the cost. How do you think that trend could impact you in terms of the aviation business line? I know in 2011 it's performed quite well. And then the other one is on fuel oil. I think KPRL had suggested in its proposals, in order to become a merchant refinery, that most of its fuel oil be off-taken from it before other independent other oil marketers are allowed to procure from outside of Kenya. So I'm not sure how that could impact your business going into 2012 if that proposal goes through. And then with regards to your profitability, I mean, I really noticed the exchange losses. I mean, there was the aspect of exchange losses sort of before your P&L, but there was also on the outstanding hedges. So that was dealt under comprehensive income. What is the period on those hedges, so in terms of the losses potentially which could crystallize out of that? And then the other question on strategic investor, potentially could it result to a change in the controlling shareholder? And then with regards to the same also, would that also result to potentially cash being injected into the business? And if so, in what structure? Thank you.
Okay, let's take one by one. David, I want to, because David deals with the aviation. Actually, the only market where we are strong in aviation is Kenya. So David, take the first question.
On the aviation, it's simple. The airlines are trying to come together to get better pricing, and they are getting better pricing. But you see, this kind of business line affects many aspects to it. One is exchange rate, which fluctuating a lot in the last at least 1 year, and the oil prices. So if you check, 2009 we decided to slow down on aviation. 2010 we started building our position. Now we are, I think, second or first in market share on aviation, and it works well. And it mainly goes with the management view on the market, oil prices, and it worked well. And I think even in 2012, it will work for us. This aviation company is coming together. Yes, bottom line, it helps them to get better pricing from the oil companies.
Okay.
You want on KPRL? Because we are taking all the fuel oil. I don't know what they are referring, what the question was.
I don't know.
There is no fuel oil in refineries, so we are taking all.
Eric, what were you referring to in respect of fuel oil?
I think that there was a couple of proposals. I think some of them was to try and ensure they remain competitive post, once they become sort of an independent, instead of relying on the current structure. So I think they had made proposals partly to do with increasing taxation and partly also was related to the fuel oil component. So that was what I was referring to.
You're the chairman.
No, don't push it to me. You take it. Because it's about KPRL, and it's a very tricky issue. So that
because you're the chairman, I'll take it.
Okay, take
That's what I mean. KPRL cannot be competitive. Whatever you do, whichever way you look at it, it's a loss-making business. So this thing cannot be competitive. Only if you come and put protection, means you'll increase selling price out of the gate of refinery, and then you'll force the Mwananchi, the Kenyan public, to pay more to make sure that you'll guarantee their expenses. So this refinery, to say that it can be competitive or compete with the import parity, it's impossible because of inherent problems we have there. Fuel oil, there is no fuel oil. All the fuel oil production has been taken. We are active player in the fuel oil. Above 50% from the fuel oil consumption in Kenya is been done by us. We are supplying Rabai, 2 engines, many small customers, medium-sized customers. So we know this market well, and we are importing, as our chairman said, we are importing a lot. About the oil refinery saga, we just wish to have it merchant, and to try and to make sure that this refinery will compete on the import parity. Because if you go and add some premium or some additional cost to the public by securing the refinery, I don't think we are achieving anything. You just take it from one hand to another. We'll still keep the inefficiencies that we have there. This is the oil industry, not only KenolKobil, approach about the KPRL issue.
Great, thanks.
Okay. Now, the third question was about the profitability, or say the exchange or realized exchange loss. Let me tell you a few things. First, part of it we took the hit in this year. Part of what's coming in January, February in this year, in 2012, we took a provision in 2011. Just to tell you. But still there is more. Don't misunderstand. And you have noticed what has happened with the shilling, and we have had the policy of hedging at least 50% of our net forex or let's say foreign currency, US dollar liabilities. So of course it's there. Now, and there is a reference to that in in the publications we made today. Now, whether we'll be able to manage it this year, of course we will. The effect is in this year, in the beginning of the year, as I said, there would be, other opportunities and other sources of revenue and margins to cover for this loss. And you could see even in 2011, we had in total, what is the Forex loss? 1.5 or 1.6 billion Kenya shillings. And still we are, producing strong results. But remember, some of it already been taken in 2011. Last question was on, a strategic partner. And you somehow connected it or related it immediately to the controlling shareholder. I truly don't think that it's, it is necessary to be. But what I envisaged when I said so, I want to bring a kind of a partnership or strategic alliance with a major player who can take, together with us, take KenolKobil together to the next level. Not necessarily, but does not mean that it's not an option. But because it's outside of my control, I can only say that I'm looking at this kind of strategic alliance with multinational, with a major player in this industry in order to take KenolKobil to the next level, because KenolKobil is truly becoming a big one. You can see the size, you can see the turnover, you see the financing level that we require. You see where are we focused on. We are focused on further expansion. We are focused on additional investments. We are focused on storage. And this all requires substantial investments in order to, to be able really to crystallize this growth and additional value. So that's the way I put, I put it to you. Does not mean that I have any knowledge of what the controlling shareholders are going to do. And I can only say that it's not necessarily related. It can be as well without equity necessarily. It can be in many other ways. Thank you.
Thank you.